Today on the blockchain report, Bitcoin's at 106K and the bulls are breathing heavy. Analysts say 200K by New Year's end if the market doesn't get cold feet first. Trump slipping Bitcoin tax breaks into his big, beautiful bill. Saylor's rewriting corporate finance with laser eyes. And yes, a lingerie MMA league is stacking sats because GameStop told them to? Okay, all this, a special guest, and more on today's show. Let's go! Good morning, my Bitcoin maximalists, ETH exit liquidity providers, and everyone who calls their trading losses portfolio pruning. I'm Hank Hudson, coming to you live from the tech capital of the United States, San Francisco, California. It's Tuesday, and as we roll into the week, the markets are a little jittery. Influencers are chasing the latest meme coin, and somewhere a smart contract is accidentally sending funds to a random wallet. Now, before we dive headfirst into this week's regulatory quicksand and act like the SEC's latest tweet isn't already old news, smash that like button like it crashed your altcoin bag, and follow RoxomTV and me at Hank at RoxomTV on every platform you scroll through during those endless team calls. Now, whether you're tuning in from a venture-backed coffee shop fortress in the jungle, a tent in Texas with satellite internet, or your cousin's basement that has that oddly fast broadband, top off your LaCroix, tweak your ChatGPT subscription, and let's unpack whatever madness the crypto cosmos threw at us since yesterday. But before we do, let's first check out this morning's market rundown. Let's go. All right, it's Tuesday, a new day, and let's see how the numbers are treating us this morning. Not great. Okay, this morning not looking incredible, but that's okay. The day is young, there's a lot of room, and we can only go up from here, right? Right. Okay, right now, Bitcoin is hovering right above that 106K mark. We're down about a percentage point or $1,000 or so in the last 24 hours. We were hovering around that 107, 108 range yesterday, but today, a little bit of a pullback. Nothing to fret about just yet. Ethereum doing what Ethereum does, and that's continuing to hover beneath that $2,500 mark. We're still stuck around that 2,420 range. XRP down almost 2.5 percentage points this morning, right at that 218, 219 a pop mark. Cardano is down about 4% this morning. Charles Hoskinson's not having the best day so far, as Cardano's sitting beneath 55 cents a token currently. And last but certainly not least, we have Dogecoin doing a whole lot of nothing, as it tends to do, sitting right beneath 16 cents a coin. In the stonk market, let's see if TradFi is treating us a little better this morning, and it's also not. Right now, the Dow Jones is actually up a little over a percentage point this morning, so things are okay over there. Yeah, the NASDAQ is sitting a little down this morning, almost a full percentage point, hovering around that $20,200 range. S&P 5, they're sitting at just beneath 6,200, also down just a little bit this morning, not a lot though. MicroStrategy, not having the best AM currently. Michael Saylor might be spitting out his Cheerios right now as they're down about almost 6% this morning. It looks like that little Bitcoin pullback equaled a little bit more when it comes to MicroStrategy stock, as they're down to 380, almost 24 bucks this morning. Coinbase also down about $7.5 to that 343 level. Tesla, also not a great morning. They're down nearly 5% already, hovering just above that $300 mark. Nvidia also down almost 3% itself, sitting at $153 a share. And lastly, we have GameStop, just eclipsed that $24 mark, and they're also down on the whole this morning about 1.5 percentage points. So, a lot of red this morning, but the day is young. When we come back, we have this morning's bull run, a special guest, and much, much more on today's show, so stay tuned. We'll be right back after this message.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to the Blockchain Report. We've got a real treat for you on our bull run this morning as we have a special guest joining us who will be going over our top stories of the day. And our guest, well, he's a lot of things. He's a builder, a boundary pusher, and a guy who looked at Bitcoin and said, what if we could do more? He's leading the charge on the first decentralized Bitcoin Layer 2 to support Ethereum-style smart contracts, bringing programmability to Bitcoin without sacrificing decentralization. So if you're excited about bridging ecosystems, scaling Bitcoin the right way, or just love it when someone breaks the rules and makes it work, you're going to love this one. Founder and CEO of Botanix Labs, Willem Schroe, joining us on the Blockchain Report today. Willem, they are really excited that you're here, and so are we. Thanks for your time this morning. How are you on this Tuesday?
Exciting news for us. Botanix is going live.
So Willem, before we dive into the news today, and we got a lot of it, I would love for you to just give us a quick origin story. How did you go from your own world of traditional finance and entrepreneurship to building Bitcoin infrastructure at Botanix? Tell us more.
Yeah, absolutely. I mean, I grew up in Belgium, very heavy mathematics and engineering background, researched in cryptography. So saw Bitcoin already in my cryptography classes like a long time ago. But then you start growing up and you actually see the power what Bitcoin is. It is the best money ever made. It is absolutely credibly neutral, open, permissionless. And I 100% started believed that Bitcoin will be the next reserve currency. So throughout my journey, I lived in Saudi Arabia, went to the Harvard Business School, saw people get their bank accounts seized, saw governments seize people's and block people's bank accounts and wanted to change that. And then about 2.5 years ago, I came to the realization, okay, you have Bitcoin, this absolute incredible store of value. And you see all these applications, reaching product market fit, built on Ethereum, smart contracts, so much you could do. And I wanted to bring that to Bitcoin, but I absolutely believe in the values of Bitcoin, in decentralization. So wanted to bring that in a decentralized Bitcoin Layer 2, and that's now live.
Well, that's incredible, Willem, and we are super excited to have you today to learn more about Botanix and to chat about some of today's big stories. So we're going to get into the first story. Hang tight, and we'll be back right with you in just a sec. Sound good? All right, rock and roll. Well, gang, Bitcoin is now in that magical zone that Wall Street loves to call cautiously optimistic, which basically means everyone's bullish, but they don't want to jinx it just yet. And according to the data, there's a whole lot to be bullish about. Let's start with this, shall we? Over 96% of all Bitcoin is currently in profit. Now, at its peak this week, that number hit 98%. Now, this means that almost everyone holding Bitcoin is looking at their wallet and thinking, I should maybe sell now. And historically, that's exactly when things tend to get a little weird. You see, back in January, we hit a similar 98.8% profitability level, and Bitcoin promptly fell from 109K to 74. Because when everyone is winning, someone usually hits the sell button. So yeah, volatility might be incoming soon. But here's the flip side. These same metrics also suggest massive momentum heading into the back half of 2025. And more analysts are now targeting a $200,000 Bitcoin price by year's end. Now, that's not hopium, that's data-driven hopium, my friends. And Glassnode's weekly market pulse shows the realized profit-loss ratio, which is basically the Vibes-adjusted P&L for the entire market, has jumped from 1.1 to 2.8 since June of 2022. Now that's a 156% increase, and it pushes the ratio above the high band at 2.4. Now it's another sign of strong market conviction, and also a reminder that if demand dips, we could see some profit-taking whiplash. Glassnode puts it quite simply, saying, this rally needs continued demand and broader market confidence to keep going. But the sentiment shift is already underway. Institutional players are reloading, retail is re-engaging, and bullish predictions are stacking up faster than Saylor's DCA schedule. Let's talk charts here for a second, shall we? Analysts, stock money lizards, say Bitcoin is breaking out of a multi-year channel, and it's not breaking out politely. They're calling for a short-term move to 140K, followed by an explosive breakout to 200K by this year's end. Maybe even 250 in 2026, if we're lucky and the Fed Reserve keeps vibe checking the dollar. Analyst Mags agrees, pointing to a breakout above the 2.618 Fibonacci level with a target line of 155,000 in the short term. Now, over at 21st Capital, co-founder Sina projects 130K to 200K by Q4 of 2025, using a power law model that probably looks something like it was out of A Beautiful Mind. Meanwhile, Bitwise Investments says Trump's trade policies could weaken the US dollar index, giving Bitcoin the rocket fuel it needs to hit 200,000. And Bernstein Research, well, they're pointing to the spot Bitcoin ETFs and Bitcoin Treasury companies as the institutional megatrend driving this next leg higher. So where does that leave us now? Well, somewhere between euphoria and crippling anxiety, also known as Bitcoin in July. We've rallied 590% since the bear market bottom at $15,500 back in November of 2022, and we've got nearly the entire supply in profit. And we're staring down a potential leg to 200K or a nasty correction if momentum stalls. So yeah, cautiously optimistic. Try optimistically cautious, but this time with laser eyes. All right, we're bringing Willem back to the show. Willem, a lot of people out there are saying Bitcoin could hit 200K this year. Do you think that's a real possibility, or is that just another bull market fantasy?
No, I think that's an absolutely real possibility. I actually think the probabilities are very high. Bitcoin has been more or less flat for the last 2 months. And we all know when Bitcoin moves, it moves aggressively. And so you just said it, in 2022, it was 15K. Now it's above 100. And so 200K is only a 100% increase from here. At all-time highs, of course, everyone is in profit. But why would you ever sell Bitcoin for dollars? Bitcoin is the possibility to be the next reserve currency, is a apex asset, as Michael Saylor would say. And then you just have a lot of demand waiting. All these treasury companies that are copying the MicroStrategy playbook, they are all looking to buy Bitcoin in the coming few months. So there's a huge amount of buy pressure. And these companies that will buy Bitcoin, that's sticky capital. Like MicroStrategy doesn't sell. It's an only increasing playbook. And so I 100% think that's possible. And it might happen sooner rather than later.
Well, we certainly love to hear that, especially from someone who's got such a intimate knowledge of the space like you do. But it does beg the question, Willem, when 96% of Bitcoin holders are sitting on profit currently, is that actually a good sign, or does that usually mean we're due for a bit of a pullback?
Yeah, I think when you're at all-time high, 100% of the people are in profits. We've seen that over the last 15 years. I don't think that's uncommon. Like, a lot of Bitcoiners believe in something higher and that it will keep going up for the next 10 years. Like maybe in the year 2030 or the year 2040, this is actually a reserve currency. And if it's a global reserve currency used as money, something that Botanix enables, then its value is in the millions of dollars, and it's $10 million. So throughout that whole period, of course, you're going to have volatility, but eventually, over time, we'll hit all-time high after all-time high after all-time high, where 100% of the people are in profit.
Mm-hmm. And with all these people in the profit currently, Willem, I think we can agree that one of the biggest drivers of Bitcoin's popularity is the price, right? Everybody wants to know about the price. What's the price at? What's it doing? Where's it going? From your point of view, do all of these price predictions we're always hearing about, 200K, 250, 150, a million, whatever, do these actually help the Bitcoin ecosystem grow, or are they just kind of attracting the wrong kind of hype for Bitcoin?
No, absolutely. I consider it the top of funnel. price increases bring more interest of everyone in the world. They're like, okay, why is this thing actually going up? I don't understand Bitcoin. Then they'll educate themselves. They start seeing that the government just keeps on printing money. Then they start understanding the value. Then they educate themselves more. Bitcoin is hard to understand, but once you see it, it's impossible to unsee it. And that's the moment you become a believer. And every cycle, every time more and more people come in, they will never sell. They are committed to ride this to the end of time because Bitcoin is something bigger than all of us. And I think this cycle, what we've seen now is the Bitcoin treasury companies. But one thing that's not calculated in the value yet is what if actually your Bitcoin becomes productive? What if you can start using it in smart contracts? What if Bitcoin actually starts accruing value from all these applications from a world economy that is slowly starting to work in Bitcoin? So today it's just being valued as an upcoming gold, but it can be much, much more than that.
And how do you feel, Willem, that this type of price action or these price predictions, how do those affect what you're building at Botanix? Does it help bring in serious interest, or is it just noise amidst when you're doing something that's actually a lot bigger?
Yeah, I mean, within our company, we have a very long-term vision. We actually believe we try to look 25 years ahead. If you actually have a global financial system with Bitcoin as the money, Botanix can be the decentralized rails where that financial system will actually happen on. So that's our vision. The shorter price actions doesn't really hurt us. It actually, like you said, it helps us. It brings people more in. Now they've bought Bitcoin. And then the question they always ask is, okay, what can I do with my Bitcoin now? Up until now, you can pay over Lightning. But Botanix opens a whole suite of new applications. Now you can start borrowing or lending. Actual Bitcoin yields in Bitcoin is now suddenly possible. And so it helps us that the price goes up. It brings more people in, more people that have Bitcoin, and that will ask themselves, okay, what can I do with it? And that's where we are. That's where Botanix comes in.
I love it. We're excited to talk a little bit more about Botanix in more detail in just a bit. I do wonder though, Willem, from your perspective, when you hear the phrase in the story, cautiously optimistic, being said time and again, what does that mean to you in the context of where Bitcoin is at right now? Do you feel like we're kind of teetering at that edge where the dominoes are really about to start falling right now, but we need to kind of, like they said, we got to be cautious about things going forward because it seems like all the things are moving in the right direction right now, but we really haven't seen like the huge price explosion we would expect given all of the positive narratives currently. So when I say cautiously optimistic, where do you think we are right now in the Bitcoin journey with that term?
Yeah, I mean, I'm not cautiously optimistic. I'm very optimistic. When I hear that phrase, you have to understand Bitcoin is volatile. It's a volatile asset. Don't go 100x leverage. You'll get liquidated. It is volatile. It has been volatile. But there's so much good news, good narratives. Of course, when bad micro news comes out, Bitcoin will get hit as well. But if you're in spot and if you're in Bitcoin, I think you're going to have some very good times very soon.
Love to hear it. Willem, hang tight because I'm going to bring you back in just a sec. We're going to talk about our next story momentarily about the big, beautiful bill. So I can't wait to get your thoughts on that. So hang tight with me, buddy. Because Washington, D.C., well, they're racing the clock again. And this time, Bitcoin might get a cameo in Trump's one big, beautiful bill. While Senate Republicans hustle to push the president's sweeping budget reconciliation bill across the finish line, pro-crypto senators like Cynthia Lummis are scrambling to sneak in one more little thing, a tax exemption for Bitcoin. The amendment could include 3 big-ticket items here. First, a de minimis capital gains exemption for small crypto transactions, clear taxation rules for staking and mining rewards, and a mark-to-market provision for companies holding Bitcoin. And if you're thinking that it sounds like that would make crypto way easier to use in the United States, you're absolutely correct. It would. Because under current law, even using $10 of Bitcoin to buy a burrito, for instance, creates a taxable event. This change would eliminate that headache, allowing crypto to function more like an actual currency. But here, my friends, is the twist. It all hinges on what gets jammed into the bill before the Senate's final vote. And as of Monday afternoon, the amendment was still in limbo. Lummis said she's working on an OBBB amendment to ensure Americans can use digital assets without fear of tax violations. But no official text has been released just yet. Behind the scenes, crypto lobbyists and staffers are whispering about what might actually make it in. The de minimis exemption? Maybe, though the threshold has changed 3 times, from $600 to $200 to somewhere around $300. The clarification on staking taxes? Probably safer. The idea is to tax staking and mining rewards only when they're sold and not when they're earned. Now that resolves a years-long gray area in crypto tax law. And for companies like Strategy or Tesla, the mark-to-market rule would let them report Bitcoin gains even before they sell, which makes those quarterly earnings calls way more fun. Ultimately, the final decision comes to Lummis, Finance Chair Mike Crapo, and Senate Majority Leader John Toon. Crypto insiders are calling it a Hail Mary, and if it gets added to the bill today, it's in. If not, it dies on the floor. One source put it bluntly, saying it's either happening today or it's not happening at all. So while the US government debates whether you should be taxed for using Bitcoin to tip your barista, the rest of the world just keeps on stacking. We're bringing Willem back. Willem, there's talk about a new rule that would let people use Bitcoin for small purchases without getting taxed. How big of a deal would that be for real-world Bitcoin use cases?
I mean, absolutely massive. People absolutely want to do this, and it's way too late already. This should have been agreed upon years ago. People want to use Bitcoin as the money. I want to buy my burger in Bitcoin, and so this has to go through. In essence, like if so many people want to do things for genuine good reasons, then we should allow to do that. Right now, the tax environment is just so messy, and so they're always running behind after technology, of course. But now Bitcoin has been around. The technology is there to pay for your burger to do these things in Bitcoin. So time to approve it.
Yeah, Willem, you have, there's people out there like, always think of Jack Dorsey, for instance, that's come out and said that it's incredibly important for Bitcoin to stay relevant and kind of fulfill its own promises to be used as an actual currency that people can readily buy and sell goods for. Do you believe that as well, or can Bitcoin still remain relevant as mainly being used as a store of value?
It will absolutely remain relevant either way. Like Bitcoin is bigger than anything. Like it's across the globe. There's only a few countries that need to start approving it as money, as we've seen El Salvador do it, and that's where a lot of activity will start happening. And so eventually every country in the world will have to follow. That's the game theory, and that is playing out. And so it will enable and put any country that approves it on the forefront of new technology development. And I absolutely believe Bitcoin will be used as money, not as a store of value. It takes time. Botanix is the next step in that journey towards Bitcoin as the money. But either way, Bitcoin will become money, not just a store of value.
Well, let me ask you this. If you could rewrite crypto tax rules from scratch, what would you want to see, especially to support Bitcoin layer 2 innovation?
Yeah, I mean, just payments for taxes is absolutely horrible. Then the second part, no capital gains tax on staking is very applicable to us because you can stake with your Bitcoin and get actual Bitcoin yield back. So this is a whole new paradigm opening up. And then, any of the DeFi on-chain activities, you kind of don't want to pay a taxable event every time you do something on-chain, in essence. And of course, for companies that would want to use Botanix, it has to be very feasible for them to do it as well.
And some people are saying that this type of legislation is about pushing Bitcoin adoption, and others are saying it's about kind of scoring political points. Where do you land on that?
Well, it's probably a bit of both, but as the most important leading country on technology, you don't want to block these things. This is the next frontier that's been building. This is the next frontier of finance, the next frontier of financial systems, of new money. If you're going to block that, then you're running behind as a country. So enabling that is uttermost important. I absolutely agree with that.
And if this big, beautiful bill were to pass, Willem, does it change how you think about onboarding new users to Botanix, or are you already building for that future?
No, I'm already building for that future. I think it will help a lot of the people in the US. Now, of course, there's 8 billion people around the world, and we've always seen, for example, like stablecoins have much more product market fit in emerging markets. Like everyone who doesn't have a bank account, they can use these wallets, they can use the on-chain economy. And so adoption is already massively happening. And so users are all across the world. Adoption or approval of this bill will help us for the US users, but we see a lot of users all across the globe.
Amazing, love to hear it. Willem, stay tuned. We're going to bring right back and talk about Michael Saylor in a second, because he's back in the news, and this time he has seen the future. And my friends, it is not credit, it's not cash, it's not even gold. It's Bitcoin-fueled public companies flipping traditional capital markets on their heads. Speaking at BTC Prague, the strategy co-founder outlined a new model of business growth. Issue equity, issue debt, convert it all into Bitcoin, and watch your market cap explode. Saylor said a public company can do in 1 month what it would take an individual 20 years to accomplish. Why? Well, because corporations have the power to convert financial instruments into digital scarcity at scale. No need to wait for dollar cost averaging. They can issue convertible notes, raise billions, and buy Bitcoin instantly. He says firms like Strategy and now potentially Trump Media are skipping traditional revenue models and instead being evaluated on one thing: how much Bitcoin can they accumulate? Forget price to earnings ratios. This is price to Satoshis. He calls the model exponential. A company can expand its balance sheet 1,000 times faster than real estate or manufacturing ever could. And it's definitely catching on. Even Coinbase CEO Brian Armstrong has teased a move toward a Treasury-style Bitcoin strategy. And with SEC-approved capital injections like Trump Media's recent $2.3 billion raise, Saylor sees the shift accelerating. In his view, the old fiat system is dying. Capital markets are no longer about operating margins and interest rates. They're about digital scarcity, hard money, and how fast you can stack sats. If this trend keeps up, we're not far from a world where the biggest companies aren't the ones making the most money. They're the ones holding the most Bitcoin. Corporate finance is being rebuilt in Bitcoin's image, and Saylor's already written the playbook. We're bringing Willem back. Willem, Saylor says companies will start measuring success by how much Bitcoin they own. Do you think he's right, or is that like a little too maxi?
No, that's absolutely right. I mean, I think a lot of Bitcoiners calculate their net worth in how much Bitcoin they have. That's the only thing that matters, especially if you believe this is the next reserve currency. And so the similar thought process happens for companies. How much Bitcoin does a company have? That is the game changer. Maybe 20 years from now, when Bitcoin is actually money, of course, companies should have productive value. But today, with this opportunity, he's fully right. That is the massive game changer.
And do you think there's a future where companies raise money directly on Bitcoin? I mean, no banks, no middlemen, just native capital formation?
100%. Funnily enough, we've seen that already play out, ICOs, etc. And now on-chain companies in the world are raising money on Ethereum and others. However, you couldn't do it yet on Bitcoin. And again, that's where Botanix comes in. Now, suddenly you can actually start raising very easily money on Bitcoin, in Bitcoin. And I think that makes a lot of sense.
Well, and this next question, I think, is probably in a lot of people's mind. It's certainly on mine, so I'm really interested to get your take on this. Let's say a bunch of public companies start stacking Bitcoin with borrowed money. What happens if we hit an absolutely brutal bear market?
I mean, that all depends on the amount of debt and what their convertible notes or whatever structure they have raised their money in. In essence, if you do it like Michael Saylor, we had a brutal bear market and he didn't have to sell because he had a very good structure. So I'm quite sure some of those treasury companies will go too far down the risk curve and will have to force sell their Bitcoin. But in essence, the idea of borrowing dollars to buy Bitcoin makes a lot of sense because the dollars keep getting printed, keep getting inflated, while the Bitcoin inflation is the other way around. We know there's 21 million, so it makes a lot of sense. It's a way to play the current capital markets.
Do you at all worry that if Bitcoin were to take a big dive, right, as it's done many times before, it always bounces back, as you and I know, but let's say it did, and we have these new treasury companies that are joining into this Bitcoin arms race, and they're not so firmly in the green like a strategy is, where it's like, I think they're like 50% in the green based on their Bitcoin holdings. But you have companies now that are buying in this low, mid $100,000 arena. If we were to see a drawback, something very typical of Bitcoin could be 70 to 80K. Is there any part of you that worries that you're going to have a bunch of these over-leveraged companies who have been buying Bitcoin by, issuing debt or whatnot, but then are going to be so far in the red that they're forced to then sell their Bitcoin, which could cause a bit of a domino effect among a lot of these newer Bitcoin treasuries? And if that were to happen, do you think that's something Bitcoin could recover from? And maybe that's just, we'll look back at this and say, hey, that was another normal part of the maturation process. Like, does that worry you at all or concern you?
It doesn't worry me at all. I think it might happen. Of course, weak hands will always sell. So if you don't believe in the full vision, then you'll end up having to sell. And maybe legally you need to sell as well. And so these crashes might happen, but that doesn't worry me for a second. I actually expect it will happen. We'll have some bigger pullbacks at some point. But in the meantime, I think a lot of these treasury companies absolutely believe in Bitcoin. And so they'll do the right way. If you've been around and you do your due diligence, you have to expect a 50% drawdown. If you don't prepare for that as a company, then you might not survive.
Yeah, that's fair. That's fair. Do you feel like as we enter this new era of companies stacking Bitcoin on their balance sheets, that investors will start looking at companies a little differently? So instead of being like, what's your P&L, they might be like, how many sats are on your balance sheet? Do you think we could be seeing some kind of intrinsic shift in how that companies are evaluated going forward now that a lot of them are starting to acquire Bitcoin?
Yeah, I think so. I think that makes sense. Probably too early for that. I mean, MicroStrategy had to survive, I think, 4 or 5 years, and only now are getting copied. I think give it a bit of time, and I think that makes a lot of sense. I think any CEO or any company that will start saying publicly, "We will never buy Bitcoin," will get hurt in their price.
And Willem, how do you see Botanix playing a role in this new Bitcoin-powered financial system? How does Botanix fit into that puzzle now and moving forward?
That's a great question. And this is maybe something interesting. I absolutely think Michael Saylor is wrong in his opinion here. He believes Bitcoin will just be a store of value. I absolutely disagree. The on-chain market, the Bitcoin layer 2 market, is open, global, permissionless, transparent, on-chain. That is just a winning factor. And a traditional financial system with all the different companies will never be able to win that. And you can already see the data. You can borrow dollars against your Bitcoin in TradFi companies. You'll pay 14%. Like with Strike, I don't know, is it 11%? It's super high. Do that on chain in a global permissionless market that's transparent and for anyone to see, and you'll pay 3%. So it's just more efficient. It's more global. It's more decentralized. It's permissionless. Always going to be more efficient. And so over time, I see the financial system moving fully on chain. Yeah, I absolutely believe that to be the case. We're at the frontier of that. It's just starting to happen. Botanix enables this, enables all the different companies to start being on chain and access this global market in essence.
Well, I appreciate you breaking that down for us, Willem, but I gotta say, my man, I'm a little concerned for you. You opened that whole bit with, I disagree with Michael Saylor. Your DMs might be getting flooded with some strongly worded messages right now. I don't know if we're allowed to say where you disagree with Michael Saylor, but I certainly appreciate your take on it. Hang 10, we're gonna be right back with you for our next story. But in other news, Robinhood, the brokerage that brought you meme stock mania, has now fully embraced its inner crypto degen in a massive new product push. The company announced it's rolling out tokenized stocks, staking, and perpetual futures all in one summer. Because who needs regulation when you have vibes? Here's what's coming. First, Robinhood is launching tokenized US stocks and ETFs to customers in Europe. That means European traders can now buy shares of Tesla, Apple, or the S&P 500 on-chain 24/7 without commissions. Welcome to the future of Wall Street, my friends, where your ETF is a smart contract and your broker is a mobile app. Now, to support it all, Robinhood's even building its own blockchain, because when you're trying to go global, you don't want to rent the rails, you want to own them. Next up, we're talking perpetual futures. Coming later this summer, European users will be able to trade leveraged Bitcoin and Ethereum futures with up to 3x leverage right from the app. These contracts, they don't expire, they just let you bet forever. Because nothing says financial responsibility like a never-ending leveraged position. And in the US, where regulators have been cracking down harder than your ex's dad on prom night, Robinhood is out there rolling crypto staking for both Ethereum and Solana. Yeah, staking, the thing that the SEC tried to ban under the last administration. Robinhood's pushing forward anyway, joining Kraken, which already reintroduced staking in select states after paying the $30 million fine for doing it last time. And let's not forget Robinhood recently acquired Bitstamp and WonderFi, giving them deeper reach into both centralized and decentralized crypto ecosystems. So while Wall Street dithers over tokenization bills and staking regs, Robinhood is quietly building the everything app for crypto finance. It's bold, it's chaotic, and if this market keeps pumping, it might actually work. We're bringing Willem back. Willem, Robinhood is offering tokenized stocks and perpetual futures now. Is this the future of finance, or are they just playing with fire here?
No, it is the future of finance. I mean, it solves problems for so many people around the world. Like, why doesn't anyone, for example, in Egypt, can buy any stock that they want? That should be permissionless. A global financial system that's permissionless is way more efficient. And so Robinhood sees this. Now, suddenly everyone in the world will be able to buy these tokenized equities. And I think this is just a forefront. Eventually, all different equities will be tokenized and will be on chain for anyone in the world to be able to buy. And that's the game changer. And it a little bit ties into what I said earlier, where Michael Saylor just believes Bitcoin to be a store of value and doesn't value yet the on-chain global financial system. But that is happening. And I'm actually excited for Robinhood not only to support Ethereum staking and Solana staking, but also Bitcoin staking.
So from where you sit, Willem, is it fair to say that you think that tokenized stocks are actually useful and they're more than just like a buzzword to keep TradFi excited about crypto right now? This is a big deal, yeah?
It is a massive deal. Like I said, now suddenly 8 billion people can start trading this. Before that, you had to go through so many hoops, and maybe you couldn't even do it. And so this is just, I think, an absolute game changer. And once the financial system starts to see that these equities that are now on chain are doing much better statistic-wise and data-wise than anything that's not on chain, that will open up the floodgates.
And another thing that I thought was interesting in this story, Willem, was that Robinhood's also building their own blockchain as well. Is that the move now? Is every company making their own chain instead of using Bitcoin or Ethereum?
Yeah, I mean, we've seen this play out already. Every company in the world wants to launch their own layer 2. The reason is, at that moment, they're fully in control. They can decide what gas fees there are. They can decide if they want to do something called MEV. They can decide who gets to transact. They basically control the whole thing. Now, as we know, anything that's decentralized and open will eventually win out. And that's why, as Botanix, we're building a decentralized layer 2. Eventually, I think all the companies will see that nobody wants to use their own layer 2 because BlackRock will say, oh, I have my own layer 2. Why don't you use this one? Robinhood has their own layer 2. And every single company has their own layer 2. And it's eventually going to aggregate that everyone uses the most decentralized, credibly neutral one. So I think it's interesting, but longer term, I think everything will aggregate to decentralized solutions.
Willem, if someone today wanted to build tokenized stocks or stable coins on Bitcoin, how possible is that with something like Botanix?
It's fully possible. Whatever tech-wise Robinhood is going to do, they can just copy-paste exactly the same tech stack, deploy it on Botanix, and suddenly you access the whole Bitcoin market. That is the game changer of what we're doing with Botanix, right? Like you have Bitcoin in the middle. It's just a store of value. You couldn't do anything with it. And you had all these applications, smart contracts, use cases outside of Bitcoin. And then Bitcoin is being used in the traditional financial system. And so we're right in the middle. Now, suddenly the application can reach $2 trillion of market value. And the $2 trillion market value can start using these applications in an on-chain permissionless way. That's what Botanix enables.
Love to hear about it. We're going to talk a little bit more about Botanix in just a sec, because I know you got a nice announcement coming out today. Before we do, we're going to go over this next story about Rick Edelman, so stay tight, hanging tight with us, Willem. Because Rick Edelman, the financial advisor to the TradFi stars, now says Bitcoin isn't just for tech bros and Twitter maxis, it's for grandma, too. In a bold new take, Edelman told CNBC and Decrypt that crypto should make up to 40% of aggressive portfolios. And yes, that includes investors that are in their 90s. Now, Edelman's logic is that if you're that old, your portfolio actually isn't for you anymore. You're a steward of the money, holding it for your kids, grandkids, and that one nephew with a podcast. Hey. Now, so why not make sure that it grows, right? Edelman, who co-founded a $293 billion asset management firm and now runs the Digital Assets Council for Financial Pros, says even conservative investors should have at least 10% crypto allocation. Moderate investors, try 25. And if you've got that risk tolerance in you and a pulse, let's call it 40%. It's the strongest pro-crypto stance we've seen from the TradFi world since Larry Fink put on his Bitcoin cape and flew into BlackRock's ETF party. Now, Bloomberg ETF analyst Eric Balkunas called it the most important full-throated endorsement of crypto from traditional finance since Larry Fink. So yeah, it's a big deal. Edelman used to recommend low single digits for crypto exposure, but now, thanks to regulatory clarity and Wall Street adoption, he's saying it's time to go bigger. He predicts blockchain tech will grow 5 to 10x by 2030, and that Bitcoin's market cap could hit 19 trillion. For context, that's about 9x of what it is today. And he also floated exposure beyond Bitcoin. We're talking stablecoin issuers, exchanges, chip makers, and custodians. Though he made it clear, how you allocate does depend on your goals and your advisor, but don't expect him to recommend bonds. He says most portfolios are overexposed to US debt, and in some cases, he'd go 100% stocks in crypto, even for the elderly. Because nothing says legacy planning quite like leaving behind some Bitcoin and a note that says don't sell unless Saylor tells you to. Willem, a financial advisor, says even 90-year-olds should own some Bitcoin. Do you agree, or is that maybe pushing things a little too far?
No, I fully agree. I mean, actually, funnily enough, my grandma also owes some. The interesting part is that a lot of older people actually get the business case much easier because they understand gold. They've seen the early years when gold was still like the store of value, the reserve currency, and so they see the value of gold, and it's very easy to then also understand Bitcoin, and so it makes a lot of sense in my mind, and everyone in the world should owe some. You can talk about if it needs to be 5% or 40% or 100%. That depends on every personal situation because you've got the volatility, of course. But I fully agree. Everyone should own some Bitcoin.
Willem, what role do you think Bitcoin should actually play in long-term wealth planning, especially for people passing down money to future generations? Do you have a percentage that you feel is a good amount to allocate? Again, this is not financial advice to anyone out there. I'm just curious as to your opinion.
Yeah, that's a great one. I mean, it depends if your children absolutely believe in Bitcoin. If they inherit the Bitcoin and sell it, that would be sad, of course. But in essence, yeah, somewhere between 10% and 100% makes a lot of sense for me.
Do you think right now, Willem, that the future of Bitcoin is more about buy and hold or borrow, build, and use? I mean, where do you think things are heading? Where do you think things are heading? And I think I've got a guess, but I want to hear it from the horse's mouth.
Yeah, I mean, hold is just one thing you can do. The possibilities are much, much more. Like if you want to see the future of a financial system, if you want to see the world running on Bitcoin, and if you want to increase your net worth at the same time, what you do is you borrow dollars against your Bitcoin. That's exactly what the play of kind of what MicroStrategy and all these Bitcoin treasury companies are doing. Why wouldn't you do it yourself on chain at very good different rates? Spend your dollars, keep the Bitcoin, and use the Bitcoin.
I think I agree with you, my friend. I think I agree. Hang 10, because we've got one more story left, and I know I'm going to want to ask your opinion on this next one. So stay with me here, Willem, because Botanix Labs just hit the testnet with its new Bitcoin sidechain, and they didn't come alone, backed by a 16-member federation, including names like Fireblocks, Antpool, Galaxy, XBTO, and the network is designed to be decentralized from day one. Now that means no single player, including Botanix themselves, runs the show. Think of it as like a group project, but the kind where everyone actually does their part. Now, this new sidechain uses something called the Spiderchain protocol, which basically lets developers build Ethereum-style apps like lending, staking, and other DeFi stuff right on Bitcoin. No bridges, no wrapped tokens, no nonsense, just Bitcoin doing more than hodling. Now, Botanix says this is just the beginning. The plan is to open it up even further over time, letting hundreds of nodes join in and eventually allowing anyone to run a Botanix node. The mainnet is scheduled for later this year, and if all goes to plan, it'll be one step closer to turning Bitcoin into a full-on financial playground without compromising the things that make Bitcoin, Bitcoin. Willem, you've officially kicked off the testnet with a 16-member federation. Why was it so important to launch Botanix without centralized control, even from your own team?
Let me first correct you. We launched mainnet about 2 hours ago. We're absolutely live on mainnet with 16 different node operators. Like I said, I think what's winning here is a global decentralized financial system. You don't want companies like a Robinhood to run a global financial system. Like which country would agree on that? But if something is credibly neutral and decentralized across the globe, that can run a global financial system using Bitcoin as the winning money. That's what we're building. That's what the Spiderchain enables. And yeah, this is the future. People can try it out. You can start. We have a whole suite of ecosystems. So a lot of people in the Ethereum ecosystem, these applications, they can start seeing that future. They can see that actually Bitcoin is the winning money, EVM is the winning virtual machine, and now you can start using your Bitcoin and make your Bitcoin productive and put it to work and actually make more Bitcoin. So that's exactly what people want to do. And why it's important that it's decentralized. We start with 16 today. By 2026, we'll be over 100 operators. By 2028, we'll be over thousands. And so now you have a global decentralized financial system. That's what Botanix is.
Now, Willem, for all of our non-devs in the back, what exactly is the Spiderchain? And how does it let people use Ethereum-style apps on Bitcoin without bridges or wrapped tokens?
Yep, it's a Bitcoin layer 2, meaning we're purely connected to Bitcoin, but our virtual machine or our operating system, as you could look at it, is the EVM. meaning it runs all EVM style smart contracts. So you can now copy paste any smart contract you have in the EVM world, like on Ethereum or Arbitrum or anywhere. And you can deploy that smart contract and that application on Botanix. And Botanix purely runs on Bitcoin. So now suddenly you bring that application to Bitcoin. The Spiderchain itself is basically a network that runs over Bitcoin. So all these 16 operators, they tie in together into Bitcoin and secure the network of Botanix. So Botanix is a proof of stake. These operators will have to stake Bitcoin and allows for this network to grow slowly over time.
And Willem, you've already got some pretty major players in the federation already. If I do believe I'm correct here, we're talking like Fireblocks, Antpool, XBTO. How did those partnerships come together, and what are they actually doing on the network right now?
They are securing Botanix. The cool thing is, even if Botanix ceases to exist, then this network just runs. Your Bitcoin is safe. So all these companies provide the security. The trust assumption is you have to believe that these companies are secure. That is, in essence, the trust assumption you make with using Botanix. But these are 16 big organization, legit companies, been around for a very long time. And the most important thing, it's spread across the globe. So we optimized choosing these 16. We actually had inbound interest for over 100. We did a security due diligence out of all of them, and then we optimized for global spread across different jurisdictions. That's how we ended up with this small subset of highly professional, high secure federation.
Interesting. And correct me if I'm wrong, is the end goal to let anyone run a Botanix node? Is that kind of what the future looks like?
That is the end goal. That's where the Spiderchain separates itself technology-wise from any other Bitcoin layer 2. Anyone will be able to run a Botanix node.
What do you think is the path from where we are now, a 16-node federation, to that kind of wide open decentralization? What's that path look like?
It's actually easier than most people would think. I think we're set now to increase this to 100 operators in 2026. And then once you go at 2026 with 100 operators, you'll have to make some consensus changes to basically go beyond that. And so that's where we think thousands and tens of thousands of operators are fully possible. That will take another 2-3 years, but nothing technology-wise that holds this back.
Willem, we got to start closing up this interview here. I know you got a busy morning, but I do have one other question for you. I got to be real. Building a sidechain on Bitcoin doesn't seem like an easy endeavor. So I need to know, what was the biggest technical or philosophical challenge you found yourself running into to get this thing live? And how did you guys go about solving it? Because this is no small project here.
Absolutely. Bitcoin is absolutely hard to build on. Like building on Bitcoin, these blocks come whenever. The scripting language is really hard. Bitcoin is adversarial to build on, especially if you compare that to Ethereum, you can just write some smart contract code, right? And so it took a lot of testing. So we were on testnet for about 8 months on our V1, about 8 months on our V0. It took us 2.5 years. With probably a group of the best engineers in the world to bring this together. But this is now fully battle tested, fully audited. This is quite a feat of technology to be built. I think this is the game changer. Like actually bringing Bitcoin in a decentralized fashion with a consensus, with full EVM equivalency on Bitcoin. That's where the game changer lies. It took a long of time to build. Decentralization is really hard. Getting all these nodes to talk to each other, the interactivity, getting that consensus is really difficult. But once it's there, it kind of works really, really well.
That's what we like to hear. And Willem, I got to say, we really appreciate your time this morning. It's so fun to chat with somebody that not only knows about Bitcoin and the future of where it's going, but is literally helping build it. So we really do appreciate your time with us on the Blockchain Report this morning. Before we let you go, though, if our audience is out there saying, hey, listen, I want to learn more about you, I want to learn more about Botanix, where can we send them?
Absolutely. So you've got the Botanix Labs Twitter account, botanixlabs.com. You can find everything there. And I would really invite you, if you actually believe in Bitcoin as the winning money, and you think 30 years from now, this whole world can run on Bitcoin as the money, you will see that Botanix can actually run this financial system. It's like a glimpse in the future. And at the same time, you can stake your Bitcoin, get actually more Bitcoin back and increase your Bitcoin stack. So check it out, try it out. And maybe 30 years from now, you are one of the first to ever transact on the new financial system.
Incredible. Willem, thank you again for all your time and your insight and your expertise this morning. It's been an absolute blast. You're welcome anytime on the show. So next time you got something big to announce at Botanix, we better see you right back here. Thank you so much this morning. It's been a lot of fun.
Absolutely. Thank you.
Thank you. All right, we're taking a quick break, but when we're back, we've got some crazy stories, including a lingerie MMA outfit that's becoming a Bitcoin treasury. Okay, it's 2025. This is where we're at now. We'll be right back with that and more after this break. All right, we're back with more of this morning's bull run, and a big thanks again to Willem Schroe from Botanix Labs and joining us this morning. Make sure to check them out. They're doing some pretty cool things in the Bitcoin space, so Botanix Labs. In other news, Texas has officially decided that it's 1836 again. Governor Greg Abbott has signed House Bill 1056 into law, making gold and silver legal tender in the Lone Star State starting May 1st of 2027. Because when Bitcoin goes to the moon, Texas goes back to the gold rush, I guess. The law amends the state's government code to let Texans use gold and silver for day-to-day financial transactions based on a value determined by the state comptroller. So yeah, in less than 2 years, you might be able to pay for your Whataburger in silver coins if you can figure out how to break change for a quarter-ounce bar of gold. Abbott says this move honors the U.S. Constitution, which technically allows states to recognize only gold and silver coin as payment of debt. An important caveat, though, is the new law does not ban Federal Reserve notes or U.S. dollars. It also doesn't require any business to accept gold or silver, so don't go trying to buy gas with Krugerrands just yet. Retailers, well, they're not exactly thrilled about all this. Even back in 2015, when a similar bill was proposed, people were already asking that one important question: how do you make sure the coin someone hands you isn't fake? Reddit users, proving once again that they're ahead of the curve, pointed out that there are a lot of moving parts to making this actually viable. Like, I don't know, say verifying purity, calculating real-time exchange rates, and not getting mugged outside a Taco Bell. The idea of establishing a transactional currency could eventually include digital money backed by gold or silver, but let's be honest here, most Texans are still trying to figure out how to use Apple Pay. Now, here's where it gets really Texas. On the same day Abbott signed this into law, he also approved legislation to create a state strategic Bitcoin reserve. So yes, Texas is now backing both hard money from the past and hard money from the future, which tracks for a state where you can buy a flamethrower at lunch and mine Bitcoin by dinner. A few other U.S. states already recognize precious metals as legal tender, but none of them require businesses to actually accept it. Some businesses accept gold backs, those shiny notes infused with actual gold foil, but those aren't legal tender in the official sense. They're more like a fancy gift card for people who hate central banks. So what does this mean for Bitcoin? Well, as gold makes its government-sanctioned comeback, it ironically reinforces Bitcoin's use case. Hard, verifiable, digital money without the need to carry around heavy metal in your pocket like it's a boss fight in Zelda. Because whether it's 106 Bitcoin or $3,300 gold, one thing is clear: the fiat experiment is cracking at the seams. In Texas, well, they're hedging on both sides. All right, we're going to take a break and swing over to the market rundown and see where Bitcoin is at right now, because I got a whisper from a little birdie and it might not be great. Let's go over to camera 3 and check out how these prices are looking. I'm going to revisit to our market rundown. Okay. Right now, last time we checked, Bitcoin was hanging around that $106,000 mark. It briefly went below it, currently sitting just above 106K. We're holding on for dear life. We need a strong close at the end of this week, but hey, it's only Tuesday, so we're doing all right. Ethereum also down on the day, almost 2.5 percentage points on the whole. XRP, they are down as well this morning, and nearly 2%, sitting right around that 219, 220 mark. We have XRP Cardano still hovering beneath that 55 cents level. Cardano has been through it a little bit as of late, but it's hanging around. It's not going anywhere, at least not just yet. And last but not least, we have Dogecoin still waiting for Elon to get back on SNL or something so it can revisit some all-time highs. But it has been stuck in the doldrums of the 15, 16 cents area for a little bit now, so not a lot moving there. In TradFi, let's revisit. Right now, the Dow Jones is doing okay. They're up a percentage point this morning, about 500 points on the whole, sitting right around that 44,500 mark. Things are okay in the Dow right now. The NASDAQ Composite down nearly a percentage point this morning, coming back down to around 20,100, 20,200. It is definitely down a little bit on the day. And the S&P, not a lot happening. Currently sitting right around that $6,200 mark, down a few fractions of a percentage point, all pretty negligible at this juncture. MicroStrategy, not the best day it's having currently. Right now, they're down $24, $25 a share. That's nearly 6% on the day. Michael Saylor must have tweeted something that TradFi wasn't particularly in love with, because they are feeling the heat this morning, down to around 379, 380. Coinbase is also down this morning, nearly 4 percentage points now. It was about 2.5% earlier, but it is feeling the heat. Currently sitting right around that 337 mark. Tesla also having a bit of a day. They're down about 4.5 percentage points, cratering down to about 303, 304 a share. And Nvidia also not feeling the love, down about 3.5 percentage points themselves, right around that 152, 153 mark. And GameStop, doing what GameStop does, hanging out around $24, even though underlying fundamentals scream that you should probably not own that stock. No offense, GameStop, I just don't know anyone who buys video game hardware supplies anymore. So that's where we're at there. Let's bring it back. We got more bull run stories, so let's get back to camera 1, please. Yeah? We're good on camera 1. Okay. Well, because apparently owning a golf course and a social media platform just wasn't enough, the Trump family is now going full laser eyes with American Bitcoin, the mining firm backed by Eric Trump and Donald Trump Jr. and maybe Kid Rock. I can't confirm or deny that, but it seems like it would be. Nonetheless, it has raised a whopping $220 million with plans to load up on BTC and mining rigs, because nothing says strategic reserve quite like thousands of ASICs whirring in a warehouse funded by MAGA bucks. The capital raise came from the sale of over 11 million new shares to private investors. And in a true crypto flex, around $10 million worth of those shares were bought using actual Bitcoin at an exchange rate of about $104,000 per BTC. Now, according to documents from Hut 8, the company's majority owner, after deducting fees, American Bitcoin netted about $215 million in usable funds, and they're not wasting their time. The money will be used for strategic and Bitcoin accumulation goals, which in normal language means we're buying Bitcoin and the machines to mine more of it. The company officially launched back in March after Hut 8 partnered with American Data Centers, a firm tied directly to the Trump kids. Now, this move further cements the Trump family's growing ties to the crypto space. Backing a mining company, supporting digital assets on the campaign trail, and now positioning themselves as actual Bitcoin infrastructure players. If you're keeping track, that's Trump media on the ETF radar, Trump tokens at the meme coin level, and now American Bitcoin going full NASDAQ SPAC. Speaking of which, the company expects to go public later this year via a SPAC merger with Griffin Digital Mining. Now, once this is approved, they'll trade under the ticker symbol ABTC, which, to be clear, sounds like what your uncle calls it when he doesn't understand the difference between Bitcoin and a sandwich. But branding aside, this is a serious move. Whether you like the family or not, the numbers don't lie. I mean, $220 million raised, a chunk of it already in Bitcoin, public listings incoming, and a direct pipeline into a potential second Trump administration that's already very much signaling pro-Bitcoin policy. So yeah, whether you think it's a grift or a genius move or maybe both, one thing here is very certain. It's that Bitcoin just got a little more red, white, and orange. And some companies, well, they hold Bitcoin to preserve their cash. Some hold it for long-term conviction. And then there's Lingerie Fighting Championships, an all-women's MMA league where the uniforms are minimal, the punches are real, and the new corporate treasury strategy is Bitcoin. In a move that somehow makes perfect sense for 2025, the LFC announced plans to purchase 2.23 million in BTC over the next 6 months. But here's the kicker. They're not following Michael Saylor. They're not copying Coinbase. They're taking their cue from GameStop. Yeah, GameStop. According to the LFC CEO Sean Donnelly, the league has had a weird history of accidentally mirroring GameStop stock moves. Meaning whenever GameStop stock would surge or trend online, LFC stock would sometimes get a random boost too, despite having absolutely zero connection whatsoever. Now, this was never intentional. They were like a penny stock shadow riding the meme wave, okay? So now, with GameStop buying $512 million worth of Bitcoin back in May, the Lingerie Fighting Championship decided to stop pretending the pattern was a coincidence. And they're going all in. Donnelly said he's been keeping an eye on GameStop for years and figured if it worked for them, maybe it could work for the LFC. But this time, on purpose. The league isn't new to weird origin stories either. It began in 2013 as a mockumentary about fake fighters and a fake audience. But when cable companies aired it as a real sporting event, it accidentally became real, and then really popular. Fast forward to now, and the LFC is totally legit. They've got nearly 1 million YouTube subscribers, a touring show, and real broadcast deals. They also went public in a messy reverse merger with Cala Energy Corp, which left them swimming in toxic debt and dilutive lenders. But those lenders are mostly gone now, and the last one standing, Octus Fund, actually helped fund the Bitcoin move. Now, Donnelly says the Bitcoin buy is a 10-year play based on the belief that BTC could hit $1 million by 2035. And no, Donnelly still doesn't hold Bitcoin personally, but his company will. He says Bitcoin is the only digital asset with real staying power and brand recognition. They're staying away from altcoins, but they'll accept meme coin sponsorships if the price is right. Now, from a business perspective, Donnelly sees this as more than a meme. He believes Bitcoin could boost their balance sheet while letting them raise more capital down the line. He also said that LFC won't rely on Bitcoin as its main revenue stream, pointing toward their growing media presence at international events in London and Cardiff. So, yeah, this may have started as a parody of real sports, but now they're joining real public companies using Bitcoin as a corporate asset. Because in 2025, apparently lingerie, MMA, and meme stocks are all part of the Bitcoin standard. We're taking a quick break, but when we're back, we're going to Blockchain Without Borders because there's a German bank that just did something that you and all the Bitcoin holders out there are going to want to know about. Stay tuned. We got more on that and others when we come back. Oh boy, we got breaking news in the studio now, gang. This just coming in from the Roxom news desk. It looks like Vice President J.D. Vance breaks the tie to pass President Donald Trump's One Big Beautiful Bill Act, So why is this important and what does this mean for crypto and Bitcoin going forward? Well, first, this bill, if you remember, contains the Genius Act and the Clarity Act. So we're talking about stablecoin regulation and crypto market structure. So this is really big because this provides one unified framework, putting the guardrails in place for some real, make it easier to hold, trade, and build around things like Bitcoin. So this is a big deal here, gang. Also, the government is also going to become a slightly more pro-Bitcoin as a result of these guardrails being put in place, which likely means more money from private companies and institutions is going to be piling in now with these new frameworks in place. So this is very exciting stuff. And this is really exciting, guys. This is very bullish. Clear regulation usually equals greater adoption, more institutional money, and upward buying pressure on Bitcoin going forward. So that is some really exciting breaking news that we got here with us this morning. All right, so we got the breaking news. I think it's time for a little blockchain without borders, guys. Let's hit the stinger and do it. All right, it's time for some blockchain without borders. Let's see what's happening in other parts of the world. Right now, Germany's largest banking group is finally giving in to peer pressure. Sparkassen, which sounds like a Hogwarts incantation, but is actually the banking overlord of Germany, has announced that it will offer Bitcoin trading to 50 million retail customers by the summer of 2026. That's nearly 2/3 of Germany's population about to get Bitcoin access straight from their mobile banking apps. Now, the move is a full U-turn from their 2023 stance when they said crypto was too volatile and too edgy for primetime finance. But now they're building a direct pipeline to Bitcoin using their securities arm, Deca Bank, to offer crypto trading right inside their existing app, which means German citizens can now check their checking account and stack sats without ever leaving their bank's ecosystem. Now, according to Bloomberg, the rollout is being accelerated thanks to the new European Union's new MiCA regulations, which finally give banks the regulatory clarity that they've been crying about for years. And retail demand, well, it's booming. Matthias Diesel of Bavarian Savings Banks Association straight up admitted that Sparkassen customers have been begging for crypto services for a while now. That, combined with FOMO from other institutions, pushed the bank to make this act. Now, they're beating legacy players like Societe Generale and BNP Paribas, who are still stuck on crypto custody and tokenizing bonds like it's back in 2019. Now, this isn't just a tech upgrade here, fam. This is a cultural shift. When the most conservative banking institution in the country flips bullish, it signals mainstream acceptance and that it has very much arrived, but this time in Lederhosen. When we're back, we've got some socially awkward coming up. What has Zuckerberg announced about Meta this time? Something about superintelligence labs? Should we be scared? Maybe. Only one way to find out. Stay tuned. More and that when we're back. All right, we're back with a little bit of socially awkward. It's a story of my life. Mark Zuckerberg, he's finally gone full Bond villain. The Meta CEO announced he's reorganizing the company's entire AI operation under a new banner, Meta Superintelligence Labs. Because when your company controls Instagram, WhatsApp, Facebook, and your family's group chat, the only logical next step is developing superintelligence. Yeah. That vague theoretical concept where machines become smarter than you in every way, including, apparently, how to run a multi-billion-dollar tech empire. Now, Zuck says this marks a new era for humanity, but he also says Meta is uniquely positioned to deliver this AI utopia to the world thanks to its ability to spend endless money at an ungodly pace. Meta's internet ad business rakes in $40 billion every quarter. So naturally, they're now pouring tens of billions into data centers to make sure their AI doesn't run out of compute when it's planning our future. Now, Zuckerberg tapped Alexander Wang, former Scale AI CEO, as Meta's first ever chief AI officer. Fun fact, though, Wang is not a computer scientist. He's a data labeling prodigy turned Silicon Valley darling. He's also the guy who co-hosted a secretive AI summit in Utah and helped Meta acquire Scale AI for $14.3 billion. And for added spice, former GitHub CEO and crypto VC bro Nat Friedman is joining too, helping Wang lead the lab and productize whatever it is that they're building. This isn't a pivot, mind you. This is a hostile takeover of the AI talent pool. Meta has been poaching top researchers from OpenAI, Anthropic, and Google with rumored $100 million compensation packages. OpenAI's chief research officer Mark Chen called the talent drain like someone breaking into our home. Meta called it Monday. Meanwhile, OpenAI is now sourcing chips from Google and leaning into a possible alliance with Gemini because nothing says united AI vision quite like two competitors trauma bonding over Zuckerberg's war chest. Now, to keep up, Meta is reportedly raising another $29 billion from private capital firms to build out even more AI infrastructure. That's on top of what Google, Microsoft, and OpenAI are already spending, which collectively makes this the most expensive nerd fight in human history. Now, there's still no formal definition of superintelligence, by the way, but it is widely believed to mean AI smarter than humans in every area. We're talking science, wisdom, empathy, even Tinder game. Now, Zuck believes the goal isn't AGI anymore. It's personal superintelligence for everyone, and he's willing to burn billions to get there. So while your grandma's still figuring out Facebook Marketplace, Mark's over here trying to birth Robo-God. Great. We're going to talk some AI stories. Let's bring up the stinger. AI AIO is right now. Right now. All right, well, we're talking about superintelligence. Let's find out what other things our eventual AI overlords are up to now. As in Washington's latest episode of How Do We Regulate the Robots, the U.S. Senate is now debating whether to ban states from creating their own AI regulations. Because when it comes to artificial intelligence, nothing screams urgency quite like a 5-year moratorium. Originally, Senator Ted Cruz proposed a 10-year federal block on state-level AI laws and tried to force compliance by threatening to cut off states from a $42 billion broadband infrastructure fund. You know, real subtle. But under a new compromise announced by Senator Marsha Blackburn, that's been trimmed down to 5 years, and states will still be allowed to make rules, but around two things: protecting kids online and preventing AI from deep-faking dead celebrities into new albums. Thriller 2 sounds great. Now, that is an actual legal category now, mind you. The revised plan also dials back the punishment. States that step out of line won't lose $42 billion. They'll be blocked from a new $500 million AI infrastructure fund instead. Still not pocket change, but definitely less hostage negotiation and more passive-aggressive email. Blackburn says the compromise allows states to protect things like child safety and artists' voices, as long as they don't impose an undue or disproportionate burden on AI, which sounds great until you remember that undue burden is usually defined by the companies making the AI. States like Tennessee and Texas have already passed laws to rein in AI abuse. Tennessee's Elvis Act protects performers from having their voice and image cloned by AI without consent. Texas, well, they went even harder, banning AI from being used to generate child porn, promote crime, or encourage self-harm. So naturally, they're not thrilled about being told to sit down and let the federal government handle it. In fact, 17 Republican governors, led by Arkansas's Sarah Huckabee Sanders, signed a letter demanding the Senate drop the moratorium altogether. Their message: let states function as the laboratories of democracy that they were intended to be. Or in other words, don't tell us how to babysit Skynet. U.S. Commerce Secretary Howard Lutnick supported the compromise, calling it a pragmatic way to keep America first in AI. because nothing says AI first like federal overreach and $500 million tax incentive programs. Democrats, well, they're not exactly impressed. Senator Maria Cantwell, top Democrat on the Commerce Committee, said the Cruz-Blackburn amendment does nothing to protect kids or consumers. Her words, it's just another giveaway to tech companies. She also accused Lutnick of potentially stripping internet funding from states that don't comply. Because what's AI policy without a little broadband blackmail? So where does this leave us now? Well, exactly where we've been for the last 5 years. Congress is arguing about regulating AI while AI regulates everything else. No federal AI safety law has passed. States are scrambling to plug the holes. And meanwhile, ChatGPT is busy writing your cousin's wedding vows. But hey, at least Elvis is protected, right? Right. And Mark Benioff, the Salesforce CEO, he's feeling himself. And also apparently replacing himself with AI. Great. Salesforce's billionaire founder now says artificial intelligence performs up to 50% of all internal work at the company. 50! From customer service to branding, software engineering, it's now the robots doing the heavy lifting. Benioff says the shift has already cut back hiring needs and turbocharged productivity. The tool doing all the work? A new platform called Agentforce, which is delaying digital employees across nearly every Salesforce product line. He says over 5,000 customers are already using it, and that he wants 1 billion active AI agents by year's end, because nothing says reasonable scaling quite like 1 billion AI agents. He claims the agents now handle customer interactions with 93% accuracy, even with clients like Disney, which is ironic given that Benioff's own origin story sounds a lot like a Disney movie. He says he came up with the at Salesforce while swimming with dolphins in Hawaii. Now, 2 decades later, he's laying off human workers and co-writing business plans with a robot. Because the future of CRM is apparently half Flipper, half GPT. Now, Benioff also dunked on Microsoft's Copilot, calling it a glorified wrapper for ChatGPT. He insists that Salesforce is building something more autonomous and original. And in case that wasn't enough brand flexing, he calls himself the Taylor Swift of tech. Bold move, especially from a guy who once spent $20 million to license Albert Einstein's face for branding purposes. But hey, when your company's stock depends on vibes and volume licenses, you might as well lean in. Despite the AI fanfare, Benioff admits the tech is disruptive. Salesforce has already cut more than 1,000 jobs, and he predicts that today's CEOs will be the last generation to manage entirely human workforces. He estimates that AI could unlock $3 to $12 trillion in productivity globally, which would be great news if you're an investor and not an employee. Still, Benioff insists you can do well and do good. Salesforce pledges 1% of equity, product, and time to charity. He even incorporates Hawaiian spiritualism into company culture. And despite the media narrative, he says San Francisco isn't dying and that the people creating the future are right here, which makes sense. He's replacing half the city with bots and writing the press release himself with ChatGPT, probably. And according to Microsoft, your next doctor might be a chatbot with a stethoscope. The tech giant announced this week that its new medical AI platform, the Microsoft AI Diagnostic Orchestrator, or MAI-DXO, outperformed real practicing physicians on complex medical cases. Specifically, it correctly diagnosed 85% of difficult cases pulled from the New England New Journal of Medicine. Now, for comparison, the actual human doctors averaged 20%. So, yeah, not even close. Also, the AI was reportedly more cost-effective in reaching those diagnoses thanks to a virtual pricing system baked into Microsoft's new benchmarking test. Because if there's one thing you want from your medical care, it's low cost and no soul. Now, to be fair, Microsoft isn't relying on the usual multiple choice tests like the USMLE, the one that's been making AI look smarter than it really is for the past few years. Instead, they built a new diagnostic benchmark that simulates real-life doctor work. The AI has to ask questions. It has to order tests and navigate clinical decision-making in sequence. You know, like an actual doctor. Except it doesn't need coffee, vacation days, or malpractice insurance. And to be clear, the MAI-DXO isn't just one AI model. It's an orchestrator. That means it can pull from multiple language models, integrate diverse data sources, and operate under preset cost restraints like a very polite insurance company with an MD. Now, Microsoft says the goal is to augment human expertise, not to replace it. But let's be honest, once you show hospital administrators that a chatbot can diagnose a complex disorder faster and cheaper than Dr. Johnson in room 3, that's not augmentation, that's headcount reduction with a PowerPoint. Still, Microsoft insists this is about building trust with clinicians and patients, because nothing builds trust like being told your real-life doctor got 20% on the same test the AI aced with 85. Meanwhile, the public's not exactly sold. According to the Payments Generative AI Tracker, 60% of Americans are uncomfortable with their provider relying on AI, and 57% worry that using AI for diagnosis or treatments would harm the doctor-patient relationship. Which is fair. I mean, it's hard to bond with your physician when they've been replaced by an Alexa that charges by the procedure. So where does that leave us now? Well, Microsoft's making it clear that they see AI as the future of healthcare, not in a cute robot nurse way, that sounds great though, but in a full-blown clinical infrastructure kind of way. And in classic tech fashion, they've skipped right past the should we and gone straight to the here's the rollout part. Because in 2025, even your second opinion has a login screen. We're taking a break, but when...
Not yet, Hank. I have a question for you.
Oh, you have a question for me. Do tell.
Yeah. Would you trust someone like a robot with you, with your life, if they didn't go to med school?
Ooh, dude, you know, I think I would. I think we're not there yet. And I do think there's something to be said for bedside manner. But the AI is getting so good, man. And if it can do all the diagnostic tests without the small talk, and it's getting, well, a human doctor is 20%, and it's getting things right at an 85% clip, why wouldn't I embrace technology here? I mean, I guess that means fewer jobs for doctors, maybe, but I think there's already a doctor shortage.
You think it would be cheaper?
I definitely think it would be cheaper, yeah. I mean, think about all the things that go into becoming a doctor. Just to become a doctor right now, I was recently listening to a podcast about it. You're talking about like a $500,000 like loan bill, right? And if they're only getting 20% of that right, you can remove human error, you can remove the emotions that come with being a human, and I think those, for better or worse, are going to come into play if you're a medical professional. I think we're close to a point where, yeah, I'm cool with a computer diagnosing me. If it can extrapolate information from tens of thousands, millions of cases or whatever to help best assess where I'm at or my family or my loved ones, yeah, I think I'm all about it. What about you? No good, no bueno?
No, not yet. It hasn't convinced me.
Do you think you'd be okay with a hybrid thing? You get to talk to a doctor, but he's utilizing AI tools?
No.
You wouldn't even do that? You wouldn't let him use AI tools?
I feel like, no, although I have seen some stuff online that they're already doing that. There's like patients having like seen like nurses and like doctors using ChatGPT. I mean, like in the hospital.
Let's be real. AI is going to be the reason that some of these biggest diseases that have been plaguing humanity for a long time are going to get cured. I'm thinking cancer, Alzheimer's, things like that. Like AI is already able to detect things in X-rays and stuff that human doctors have proven not as adept at doing. So I think we're at a place where like you can choose to not have AI be part of your medical routines, but you're kind of doing it at your own detriment, I think, at this point. Like, we still need a doctor to talk to. I'm not ready for Dr. Skynet to come in and start reading my charts, right? But I think we're there, man, whether we like it or not. But
yeah, it's scary. It's a scary world now.
It is a scary world now, but we can either embrace it or just ultimately be replaced by these machines anyway. So I don't know. But let's take a quick break. I need a breather. Yep. And then let's wrap things up with a little bullish, bearish, or BS and see how things are looking in terms of Bitcoin. We'll be right back. All right, that brings us to the part of today's show where we wrap up our top stories of the day and decide if things are looking bullish, bearish, or otherwise for our sweet, sweet, sweet Bitcoin. Let's recap. Our first story is we have analysts are predicting Bitcoin could hit 200K by the end of 2025. Currently, our lovable Bitcoin's sitting around that 106K mark, and analysts are starting to whisper the 200K like it's Beetlejuice or something. You can only say it twice. You say it 3 times, it comes true. So maybe we should say it. But from Glassnode metrics to power law models to old school chart breakouts, the stars seem to be aligning, or at least forming a nice Fibonacci spiral. I'm bullish on this, guys. We've seen this before. High profitability leads to short-term volatility. But when the majority of the holders are deep in the green and still not selling, that, my friends, is conviction. Add in institutional buy pressure, ETF flows, and a weakening dollar, and 200K doesn't sound that crazy after all. I mean, it's not just hopium, it's well-sourced, spreadsheet-backed hopium. So I'm bullish. The rocket's fuel is loading. Now we just need a little spark for ignition. So I'm bullish. Great start. Next up, we have Donald Trump's big, beautiful bill might include a Bitcoin tax loophole, as senators are trying to sneak in a Bitcoin-friendly amendment into Trump's mega budget bill, including tax exemptions for small Bitcoin transactions and new rules for staking and corporate holdings. Oh, I'm bullish on this one, gang. If this passes, it would remove one of the biggest headaches in U.S. crypto adoption: the taxes that make tipping your barista in Bitcoin feel like filing a 1099. Simplifying usage and giving companies more favorable reporting rules makes BTC more usable and more attractive, and that, my friends, is rocket fuel for future price and adoption. Very bullish on that one. Too bullish to start. Love it. Next up, we have Michael Saylor has a vision for corporate finance, and it sounds like a Michael Bay movie. He's saying, raise billions, buy Bitcoin, blow up your stock price. He says that companies like Strategy and Trump Media are being valued not by their earnings, but by how much BTC that they can hoard. Oh, I'm bullish on this too, guys. Hot start. This is more than just Michael Saylor being Michael Saylor. If companies start competing to become digital asset vaults, it creates consistent, large-scale buy pressure and a whole new way for Wall Street to value growth. It may sound a little wild now, but so did corporate treasury Bitcoins back in 2020. Now it seems to be a bullish trend. So I'm bullish on this. I mean, bullish earnings are out and sat stacking is in. 3 bullish, 0 bearish, 0 BS. Really hot start today. Next up, we have Robinhood just hit the nitro. They're launching tokenized stocks in Europe, adding crypto staking in the United States, and dropping perpetual futures for degens who never want to close a position. And also, they're building their own blockchain. So I'm bullish about this too. I mean, say what you will about Robinhood's chaos, they move fast. And more access to tokenized assets and staking means more people using crypto rails without even realizing it. And while the US regulatory climate stays a little murky, Robinhood is setting up shop globally and dragging crypto adoption along with it. So I'm bullish on this. Robinhood's turning retail traders into crypto natives, 1 token at a time. 4 bullish. Can we get the very, very rare clean sweep today? Let's find out. Last story, we have financial dinosaur whisperer Rick Edelman just told CNBC that grandma needs to stop hoarding T-bills and start stacking sats. He says Bitcoin should be a core part of modern portfolios, even for retirees, and upped his own recommended allocation to as high as 40%. So 40% of Bitcoin is part of your portfolio. Bullish, clean sweep, baby. I mean, when a TradFi heavyweight like Edelman says 90-year-olds should be holding crypto, it's not a joke. It's a seismic shift in the advice industry. And advisors drive trillions of dollars into capital allocation. And if that capital starts flowing into Bitcoin, it's game over for all those bearish narratives out there. So I am bullish on this. Grandpa just opened a Coinbase account and asked about cold storage. So today's score, Bullish, 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 all bullish, clean sweep across the board, which means today we are bullish AF, and I'm bringing out the money gun. We are feeling good today from Wall Street to, from Wall Street to Washington to your grandma's portfolio. Bitcoin is having a moment, and if these stories hold up, that 106K price tag we're seeing right now is going to look like a discount in just a few months. As always, thanks for joining us here on the Blockchain Report. Do the right thing. Like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms in the world. And I will see all of you crypto, chaos, degens, my people. I'll see you tomorrow for more Blockchain Reports, same time and place. Enjoy your Tuesday.